All right, ladies and gentlemen, welcome back. It is Tuesday, August 22nd. We got a little midday, late afternoon chart talk coming at you. It is 3:15 on the East Coast, 12:15 out here on the West. We got a little pullback in the market the last couple of weeks. So, without further ado, let's get right into the market outlook. I'm going to share my screen here and talk about what's going on. So, no surprise to anyone. Beginning, early March, pretty much late July through July, the market's been on a huge tear. Go to the Qs. The Qs had all the relative strength in the world. They led this market higher as the excitement for anything artificial intelligence related, kind of had us forward looking into the future about what this could do to earnings, and it created a market-wide breakout virtually. And tech stocks have been on a tear. And then this last month, we finally saw prices come in. The reason I look towards moving averages so much, they can really clue you into when trends change. So I've got the S&P right here up, the SPY, just with the 8 and 21 day, and you can see how we rode the 21 day all the way higher. That was the broad trend, and then the 8 day was kind of trailing the close price action. As soon as we broke the 8 day harshly, and then we broke the 21 day harshly, that's when the trend changed, and that was our risk off indicator. And since then, for me personally, haven't really done much since this pattern began to break down. This is kind of what we've deemed the easy action, and now it's the pullback phase, the more difficult action. So this action is kind of shaking out. We're seeing the pullback phase begin. What we want to see is when we get on top of these moving averages once again, after a little sideways action, and I anticipate we'll begin to start trending again to the upside. This kind of how do bottoms form? Bottoms are a few different steps. So we're on our way down, and the first step is the oversold bounce. That's what we got last week. I think we're both kind of in the same camp that the market probably needs a 10% correction. 10% correction would leave us this 425 area. If we overshot it, went to this 420, it's also a retest of the huge breakout area. So it all just makes sense to come back down to this 420 area at some point as the excitement for all the AI stuff, wanes. But speaking of, let's talk about the process of what makes a bottom. We got the oversold pullback Friday. We're on the rise now, but now it's, do we get rejected at this first resistance area, that 8 day simple moving average? That remains to be seen. What we need to see is tight sideways. They call it backing and filling action. That's digestive action. We want to see a little wedge get created with where these moving averages are acting as resistance, and then we pop over those, and then that would be the bottom. That's where we're looking to get pretty long and increase exposure and look to be swing trading pretty aggressively once again. But for now, it's kind of protect the account time because it's very random. Sellers are definitely in control, and every day it seems the 10-year just is on the move higher and higher. So now the 10-year is trading at its highest price since 2008, 2007, whatever that stat is. Doesn't bode well for stocks the way it's going. So what I'm looking for in that bottom is some backing and filling, maybe a wedge to pop again on top of these moving averages. And let these guide you. You don't have to be so smart where it's picking a bottom every day or shorting a top. You can see how much easier the action is when we're on top of these moving averages. You'd see how much more difficult it gets when we're below them. So keeping things as simple as possible in that regard. That's a lot of spiel out of me. Let me sling it over to Bennett over there. What you thinking?
So, very very similar outlook. And my big things, I think we just shift more into like a consolidating market. Again, you mentioned the easy money run up, and now I kind of have like this idea of this flag kind of drawn out, this horizontal, range we're going to trade in, be it 430, maybe we go a little bit lower. We have to kind of maybe shake this 430 out, before we really, get that sharper kind of reversal back higher. And like you said, maybe that has to be down to 420. That gives us the correction. It back tests that prior breakout area, turns that prior resistance into support much more significantly, and gives us a big range for the market to trade in. Even in this current range, 430 to 460, if we were just to flag out there, that's like just enough that we would need to have, a measured move break back to all-time highs. There's that, 30-point range here, sends us to, 490 in the SPY. So like you mentioned, we broke the 8-day, broke the 21-day, market's kind of been rolling over. We got that first little oversold bounce, but there's just not really a lot of, things setting up. Even on my end, the only thing that I'm kind of really liking is this Disney. And again, it can either really smoke this major
I
support.
really like that for long term as well.
Yeah,
Think about buying some long term account, just forgetting about it. Just
yes.
Frankie Butters, this is one of his bags. It's 4.
Yeah. So this is, Disney's just, rock solid company. Again, the stock's been getting, this looks like it, just lower lows into major support. Like it probably has to really shake this area of support out down here, but just relative to where Disney is compared to where it was, and just the kind of company it is, when it does start to turn back up, the risk reward here buying it, down near the major area of support versus trying to buy 200, much better risk reward. But again, this is more longer term, not, buying 87 versus 86, type of trade. Again, you touched on the 10-year. Again, with the Qs, I think, the one thing that was, pretty good to see it is we saw this major trend line. Very obvious channel the market's been in all year. It's the first time that, the Qs, NASDAQ names kind of retested or broke below that area support, and it kind of came right back. We kind of see it on the upside as well, where, when it gets near resistance, you get that one of days where it looks amazing and it's going to continue higher and it pulls back into the range. And then the same on the downside when it, breaks support, looks like world's ending, and then you get that kind of a little relief bounce. So good to see that it kind of got back in within that channel, and it's kind of just, bouncing back and forth between that. Most, sector wise, everything kind of seems to be in the same camp of kind of rolling over that extended move and starting to consolidate, other than maybe energy still, somewhat strong compared to everything else. But everything, again, just seems kind of weak, a little sluggish. Again, end of summer trading, these last few weeks tend to be the slowest times of the year to begin with. Again, a lot of people are on vacation, especially, people that are running money, they're, typically at the beach or in the Hamptons right now. So, this is definitely a less is more environment. Until
especially the context of the March to July move. It ended up being the best, or one of the top 10 best starts to the year, first half of the year for the QQQ. So with that type of action, it's not really expected to get much more out of the summer trading.
Yeah, definitely agree. All right, so I know you want to talk a little bit about Nvidia.
Yep.
That was the
All right,
big
share that script. Let me share. So Nvidia was the one who kicked off the AI trade, correct? Before this earnings breakout, it was funny. We were in pretty thick, still in the thick of that bear market. We hadn't broken that that trend line resistance in the S&P yet. So this action preceding those earnings, it was like we didn't really know what was going on. Everyone, or not everyone, I mean, a majority were waiting for this to turn down, and then they announced their because it was just had this never-ending strength, and we couldn't really figure out what had changed. And then they come out with those earnings where the forward guidance is just blown through the roof because of their impact of artificial intelligence and how much their chips will be needed in all of these endeavors and things like that. So their forward guidance and their earnings is just insane. So that kicked off the AI trade, and now that was about 3 months ago. Now they've got earnings this Wednesday, and we see they're up, up heading into the port. Casual 400 to 480 move, looks like nothing on the chart. And it's because I was looking for a better article. I don't pay enough for CNBC, I guess, so I couldn't get a good one. But all these companies, all these analysts are giving huge upgrades. HSBC hikes Nvidia price target ahead of earnings, sees 80% upside. I think they did a 680 price target upgrade, and they were going into last earnings. They had a street low 160 price target just 3 months ago. So 3 months ago, their analyst said in a year Nvidia is going to be at $160. 3 months later, he says they're going to be at $680. These guys have to do this now. They're fighting for their jobs. They were so wrong in the beginning that now they have to put these huge targets to the upside in case Nvidia does skyrocket once again, have the huge revenue guidance, have the huge surprise to the upside. But now it's getting it's getting insanely frothy. So I'm very curious to see what happens with these earnings. to go from 160 to 680, it was the same analyst to go
Mhm.
from 160 to 680, and there's like 7 of them who did it. So now it's getting to the fact of, when a stock has such high expectations going into a report, very, very hard to beat those expectations. And that's what we've seen for the most part this earnings season. It hasn't been a great earnings season, largely because the market ran so much heading into the report. It's like, Apple, for example.
Mhm.
Apple's a great example of this, where, their earnings in May, they were trading at, what is that? 165. And then, the next earnings, all they did was go straight up to 200. And the report before that, same thing. They've been, so now heading into this report, trading at all-time highs, after going on a just 45-degree angle run from, 12-month lows to all-time highs. It's tough to beat expectations that handily and
Mhm.
continue going to the upside. So Wednesday, we've got these Nvidia earnings, and they are the barometer for the entire market. That is artificial intelligence, all the software names, all the data processing names, all the semiconductor names, every little subsect of the market that trades on artificial intelligence is depending on these Nvidia earnings to crush.
Mhm.
So it feels like maybe the market's waiting around a little bit for these Nvidia earnings. I think so, because it's just such a huge catalyst for the rest of the market. So I think that's really the important data set this week. It's much bigger than the Fed or anything else that's going on. It's these Nvidia earnings, and can this AI trade continue? So I'd say that's the number one thing to look for. Those are tomorrow after the close. Just going to be a huge deal for the market. So besides that, I'm building a little watch list of new favorite names. I
Mhm.
had like hundreds of stocks I was in for. I'm trying to cut it down now. I'll go through them real quick. This
Mhm.
team, nice gap up on earnings. Again, another beneficiary software name for the AI space. Arista Networks, ANET. I think this company is going to be in the 200s soon. Really nice relative strength against the market, especially the QQQ. This is a big name for that index. Upwork, another software name coming out of a big base. We love when these earnings gap up huge and then go sideways at the resistance level. This one looks a little bit similar to this Yeti we've been talking about, being
Mhm.
you. This Yeti, really nice turnaround. Name has been in hiding for so long. Huge reaction to earnings. Now it's creating that secondary base. We want to see this get really tight here. Maybe buy up through 47, 48. I wouldn't buy this tomorrow through 47. I want to see this go sideways in another few weeks.
Mhm.
Google, absolute market leader, setting up really nicely. This is one of the biggest names in the QQQ. Let's look at the QQQ action. Just sold off ridiculously from highs. Google, on the other hand, just still like, moseying back and forth between support and resistance, creating this nice little channel. Similar in that AI craze is this Adobe. This Adobe reminds me of Nvidia before they released that like crazy earnings that made them just the runaway stock, where we're
Mhm.
just kind of riding these moving averages, going higher, not giving serious pull-ins. So this has me believing Adobe is just going to continue skyrocketing and really continue to work higher very soon. This Oracle is the trade of the week. We're still waiting on this to develop. We're looking for an entry through this 118. This thing has held up through all of this market volatility. Still looks really great, trading around all-time highs. So that one looks phenomenal. There's a few more. This VRT, this one needs a lot more work, but again, market leader, gapping to new highs, creating that secondary flag up here. We love to see that. And I'll touch on this. Celsius is another name. Their earnings are just so insane. If you want to look at a great example of like can slim earnings um and revenue and sales accelerating, the percentages accelerating, where they'll grow revenue by 50% this year, the next year is 75.
Mhm.
They're slated to grow revenue this year at like 150% after last year's 120%. It's just fundamentally, this is the prototypical growth stock, and what you can learn so much from seeing how this has reacted to their earnings and how they've traded and things like that. So again, trying to keep it pretty slim. Again, waiting for the market to turn higher above the 8 and 21-day moving averages to get aggressive again. And again, waiting for these Nvidia earnings. But again, end of summer trading. Don't want to be too active when it just became volatile. So, keeping it pretty chill through the end of the summer. I think that's really the move right now. But that's all I got over here. Bennett, you want to touch on anything else before we get him out of here?
No, I think you touched on all the major points.
Yeah, so end of summer trading, don't blow up the accounts, don't go too hard and ruin those easy months where we're printing cash. This is the difficult times right now. Other than that, that's all we got for you guys, and we'll talk to you guys next week at these Nvidia earnings. Got any questions for us? Like, subscribe, all that good stuff. All right, with all that, see you guys next week.